Good. Okay, so as always, it's nice to have everyone in the network on one call. Please take a moment to introduce yourself in the chat by saying your name and where you work and your title if you want. So I can go first. My name is Hale Crumley. I'm the Coalition Coordinator at Prosperity, Indiana. If you're new to the network, I'll introduce that too. This is the Indiana Assets and Opportunity Network, which is a statewide group of advocates and practitioners who get together to talk about issues and solutions for asset building and low and moderate income people. So please go ahead now and introduce yourself in the chat. Okay. So the organization hosting today's webinar is also one of the co-chairs of the Indiana Assets and Opportunity Network. It is Prosperity Indiana. It's my employer. So Prosperity Indiana is Indiana's community economic development network with around 200 members. We're statewide. We use what we call the REAP framework to serve our members, and that includes my free coalitions. Okay. So with that said, let's just get right into today's webinar. Just as a reminder, this webinar is being recorded. The recording as well as the slide deck will be shared with everyone who registered for this event. We'll also be doing a live Q&A at the end of the call. So stick around and please drop any questions you have in the chat as we go along. That'll be really helpful for us later. So I'd like to welcome the first speaker today, Ann Petros. So Ann Petros is a Virginia licensed attorney and a vice president of regulatory affairs at the National Association of Federally Insured Credit Unions. She volunteers with the American Bar Association Young Lawyers Division and is vice director of the Law Student Debt and Financial Wellbeing team. So Ann, the floor is yours.
Thank you, Hal, for that introduction. And I will go ahead and dive right into the content because we've got a lot to get through in a short period of time, but I wanted to provide you all with an overview of student lending and student debt and the forgiveness process that's currently underway. So on the next slide, you'll see that student loan debt has been increasing significantly in the past few decades since 1980. The cost of attending a four-year public or private college has nearly tripled. So that means more student loan debt. And the federal programs in place have not really been able to keep pace with the rising cost of education. So Pell Grants, for example, that used to cover about 80% of the cost of attending college, now only cover about 33% or a third of the cost of your education. So the typical undergraduate student with loans graduates with nearly $25,000 in debt. And of course, that is higher if you're looking at graduate students. Cumulative federal student loan debt is over 1.62 trillion for more than 45 million borrowers. And about 26 billion of that increase has been in just the past year. And there's really not been an increase in the number of recipients in the last year. So it's just growing and ballooning exponentially. Next slide. So nearly 20 million student loan borrowers are potentially at risk when the pause ends on student loan payments at the end of this year. That, of course, is the COVID relief that's been in place since 2020. So if you're in the position where you're wondering how you're going to make payments, it's really a good idea to start thinking about your repayment options. Talk to your loan servicer and evaluate what options are available to you, and if you qualify for forgiveness or potentially even the public service loan forgiveness program or any of the other repayment options available to you. So even though there are all of these great federal programs for student loan borrowers, a lot of borrowers report difficulties, including a lack of information about repayment plan options, confusing repayment terms and conditions, and slow or inaccurate processing. And just to back up a little bit, if you have a federal loan That's a loan that's held by the Department of Education. It's authorized under Title IV of the Higher Education Act. And this accounts for about 93% of outstanding student loan balances. So the remainder are privately held student loans. And we'll get, into what that means for the forgiveness in a little bit. But I also just wanted to put a quick plug in here for some resources from the American Bar Association at www.ambar.org/debt. You can find a lot of great information about student loans and student loan debt. In fact, in 2021, the ABA YLD conducted a student loan survey, which compiled responses from more than 1,300 lawyers and was really kind of shocking information that was compiled in that survey. Most young lawyers struggle to pay off their student loans. I mean, this is certainly the case for undergraduate students as well. But it's a lot higher debt when you get to that graduate level. And 65% of lawyers that were surveyed said that they suffer from overwhelming stress because of mounting debt. And this leads to things like putting off getting married, buying a home, and other major life choices. And this is, again, certainly true for those with undergraduate debt as well. It can be really taxing on you and cause a lot of stress and emotional distress. So next slide, please. Public Service Loan Forgiveness, or PSLF. What is that? So if you work full-time for the federal government, state, local, or tribal governments, or work at a 501c3 organization or the military, and you can find a list of qualifying employers through the federal government's website. So if they indicate that they provide the public service loan forgiveness or qualify for that program, you as a full-time employee at that organization will be able to benefit from this program. So with 120 payments, so that's 10 years of payments under the income-driven repayment plan for direct loans, the remainder of your loan balance is forgiven after those 10 years. Now, recent changes to the PSLF were put in place to provide some benefits and ensure that more payments are given credit toward that program. So there's a limited waiver that's available until the end of this month to receive credit for some payments that previously didn't qualify. That includes payments on loans from the Federal Family Education Loan Program, Perkins Loan Program, payments that were not made through the income-driven repayment process, partial payments or late payments are also eligible. And I can get into more detail on all of that later. If you all have any questions specifically about the waiver process, I'm happy to go into more detail, but just know that it is only available until the end of this month. So if that's something that you're looking for, you need to get a move on that submission. Next slide, please. Okay, so there are a number of federal and state entities that have oversight over student loan servicers. And the reason that I bring this to your attention is because it's important to know where to turn and to understand, how to submit a complaint, for example, if you're having issues with your student loan servicer. So, whether you have private or federal loans, you have a number of options available to you. If your loans are federal, as I mentioned earlier, they're owned by the Department of Education, and you should reach out to your servicer or the Federal Student Aid Feedback System if you have any concerns with your loans. The Consumer Financial Protection Bureau, or CFPB, has primary oversight over private student loan servicers under what's known as the Dodd-Frank Dodd-Frank Act, and the ability to supervise entities for compliance with consumer financial laws, including the Fair Credit Reporting Act and the Fair Debt Collection Practices Act. So the CFPB can pursue enforcement and legal actions for violations of these consumer protection laws. In fact, in 2017, the CFPB sued federal student loan servicer Navient. I'm sure some of y'all heard about this lawsuit, and it was based on borrower complaints about their loan management practices. Now, many states also have authority in this area, and they have, what are called mini FTC acts, or under Section 5 of the FTC Act, which is a federal act that provides the Federal Trade Commission with authority to oversee entities for abuses of unfair or deceptive acts or practices. So on the state level, the attorneys general have authority to evaluate whether companies within their jurisdiction within the state are acting in unfair or deceptive ways. And consumers also have a private right of action in most instances, including in Indiana. So there is the ability to bring your issue to the courts and sort it out that way, or to go through the state authorities. Now, the Indiana Attorney General has used its enforcement authority against student loan servicers in the past, most notably against Navient. This is following the CFPB's lawsuit, and that resulted in the canceling of private loans of roughly 66,000 borrowers, and states were paid out a total of $143 million, and there was restitution for thousands of federal loan borrowers. And that was, the result of a multi-state lawsuit following the CFPB's actions. Next slide, please. All right, so let's talk a little bit about what I'm sure many of you all have questions on, and it's the Biden administration's student loan debt order. So there were a number of provisions in this, but we'll talk about, the most pressing of that, which is a debt cancellation. So borrowers with federal student loans can receive $10,000 in student debt cancellation. Now, it's important to note that private loans are unfortunately ineligible for this forgiveness. So if you consolidated your loans and refinanced with a private lender or servicer, unfortunately, there's no going back, and you can't receive this forgiveness. But if you've got those federal loans still owned by the government, you're eligible for that $10,000 in debt cancellation. Also, Pell Grant recipients are eligible for an additional $10,000. So that's potentially $20,000 worth of debt cancellation. There is, however, an income cap of $125,000 for individuals and $250,000 for married individuals filing jointly or heads of households. The application process will be officially open soon, but just over the weekend, we learned that the beta application is available on the government's website at student8.gov. The link is on this slide, and the application process seems to be pretty quick and straightforward. So any submissions that are submitted using the beta application will be processed, and you won't have to resubmit. But this is just the process in refining the application, because obviously they're anticipating a number of people to submit applications, and they want to make sure they're getting it right. So once the application is released, it will be on a .gov website and published in both English and Spanish. And borrowers should see their debts canceled in a matter of weeks, sometime in November and December. The Biden administration really wants to discharge as many debts as possible before student loan payments resume in January. And just a quick note on the income, it's based on your adjusted gross income, or AGI. AGI, and that tends to be lower than your total income. This income can be found on line 11 of the IRS Form 1040. I see the head of household question in the chat, and I'll just go ahead and answer that right now. It is $250,000 if you are head of household. If you have eligible federal loans, meet the income requirements, it doesn't matter if you have been repaying your loans or you are in school in a grace period or even in default, you're still eligible for this forgiveness. There are some differences for those borrowers who are dependent borrowers or dependent students, and you're going to qualify based on your parents' income. So you'll have to touch base with your parents to make sure that you've got all of that information in order. All right, so let's move on to the next slide. The debt cancellation is only available for loan balances before June 30th, 2022. It is available for all direct loans, federal family education loans, Perkin loans. Those are subsidized, unsubsidized, or plus loans. Any consolidated loans can qualify as well as loans that are in default. This relief is not subject to federal taxation, but obviously there are state level tax implications, which we'll talk about in a bit. If you completed a FAFSA form for the 2022-2023 school year or are currently enrolled in income-driven repayment based on your 2020 or 2021 income, you may be eligible for relief without applying. So there is an automatic enrollment essentially for those.
Anyone else lose Anne, or is it just me?
Nope, I lost her too.
All right, thank you.
I lost her too.
And if you can hear us, I'm sorry about that. We seem to have lost you. If you want to try and hop off and hop back on, whatever you can do, we'll give it just a minute. And if not, we can continue.
Her slides are still showing, so maybe she's just muted.
That's actually me holding the slides, but thank you, Mark. That is helpful. Anne seems to have hopped off, so hopefully we can get her right back in and we'll continue. I'll give it just another few seconds.
Sorry about that. I think I somehow dropped off. Anyway, we're back. Beware of scams, and I'll leave it at that. Let's move on to the next slide, please. There are some other relief options that were not talked about quite as much, but are still really important and huge changes. So there's some additional relief in the order specifically for income-driven repayment plans. So income-driven repayment is a 20-year repayment plan. You pay about 10% of your income, and after 20 years, the remainder of your debt is forgiven. The Department of Education is releasing a proposed rule to create a new income-driven repayment program that will reduce from 10% to 5% the discretionary income that borrowers have to pay each month. So that cuts it in half. It raises the amount of income that is considered non-discretionary income and is therefore protected from repayment or prepayment. So, no borrower earning under 225% of the federal poverty level will have to make monthly payments. So that's the equivalent of working a $15 an hour minimum wage job. forgiven loan balances instead of 10 years of repayment, or will be 10 years of repayment instead of 20 years for borrowers with original loan balances of $12,000 or less. So it cuts the amount of payments and covers the borrower's unmonthly payment interest. So a borrower's loan balance will not grow so long as they're making monthly payments. Those are really huge changes that will hopefully benefit a lot of folks. Finally, the Department of Education is expected to also make it easier to re-enroll annually in income-driven repayment. Starting in the summer of 2023, borrowers will be able to allow the Department of Education to automatically pull income information every year to avoid the hassle of recertifying, which is also great. And finally, some long-term changes to the Public Service Loan Forgiveness Program. Again, a rulemaking will be issued by the Department of Education to finalize these changes that will go in effect by July 1st, 2023. And this would allow more payments to qualify for the PSLF, including partial, lump sum, late payments, and allow certain kinds of deferments and forbearances, so such as those for the Peace Corps and AmeriCorps services, National Guard duty and military service. So, all of that will count toward your PSLF payments. And these changes build on the temporary changes, the waiver that was announced, last year by the Department of Education will expire at the end of this month. And since the start of the temporary changes, the department has approved more than $10 billion in loan discharges for 175,000 public servants. So a lot of progress is being made, and with all of these changes, it looks like it'll be easier for more individuals to get forgiveness and to qualify for these really great programs if they are working in a public service role. So with that, I will pass it on to our next speaker.
Thank you for that great overview, Anne. That was wonderful. So building on what Anne shared with us, we'll now pivot to Indiana's taxation of forgiveness. And like she said, our next speaker. So now I'd like to welcome our next speaker, Andy Nielsen. Andy Nielsen is the Senior Policy Analyst at the Indiana Community Action Poverty Institute, which is the other co-chair organization of the Indiana A&O Network. Andy provides both research and advocacy on consumer protections, tax, budget, and housing policy. So Andy, welcome to the call, and it's all yours.
Thank you, Hale. So thanks everyone for joining us this morning to talk about student loan debt and this huge announcement coming from the Biden administration. But Indiana is a little unique in how we are going to treat this forgiveness. So we go on the next slide, please. So most states, let's take a step back. Most states do one of two things. They are either a rolling conformity state or they have static conformity with the Internal Revenue Code. So each state generally has a tax code, and as the federal government makes some adjustments to the Internal Revenue Code, the states make conforming changes. Indiana has static conformity, so every year generally, but usually in budget years, the state will choose when to conform to the federal government's Internal Revenue Code. Now, under both of those schemes, it is possible that states will exempt certain changes, but that's just a little bit of background. So in the most recent budget year in 2021, the state decided to conform to the Internal Revenue Code effective March 31st, 2021. But if you were paying attention to the news, a few weeks before then, a massive piece of legislation, the American Rescue Plan Act, was passed and signed into law. And it included, as Anne mentioned earlier, exempt from federal taxation any student loan forgiveness. However, in the 2021-2023 biennial budget, the state of Indiana decided to exempt that provision under federal law, meaning that student loan forgiveness starting in 2021 is subject to Indiana state and local income taxes. So while we have a lot of news about what's going to happen in 2022, borrowers who received debt cancellation through public service loan forgiveness or something else in 2021 have already been paying state and local income taxes on this discharge of debt. So Indiana is also just one of 4 states that does this. So next slide, please. So put in perspective of the most recent announcement from the Biden administration, this 10,000 and 20 up to 10,000 up to 20,000 in debt cancellation. So we have about 900,000 Hoosiers who have close to $30 billion in federal student loans outstanding, and that is as of June of this year. And the impact of this one-time cancellation will affect about 95% of Hoosier borrowers. So we have around 555,000 borrowers who receive Pell Grants, and another 300,000 who would be eligible under the $10,000 threshold. Next slide, please. So let's put this into an example so we can kind of see what the impact would be. So reminder, the federal government does not tax forgiveness. So we aren't considering the federal taxation side, but on the state side, so let's assume a Pell Grant recipient who had $20,000 in federal student loans in 2022, and they received the full $20,000. So with a tax rate of 3.23%, the borrower would pay $646 in state taxes. And then depending on the county that they live in, so 92 Indiana counties with local income tax rates ranging from 0.5% to 3%. So the borrower would pay an additional $100 to $600 in local income taxes as well. So the net effect would be somewhere between $746 and $1,250. Now, everything is depending on the borrower's specific tax return. So this doesn't mean this is exactly what they would owe, but it is the additional taxes that they would owe. And the kind of secondary effect is that when you if you live in a county, right, that a higher local income tax, and you get above that $1,000 threshold, you may start being subject to underpayment penalties by the Indiana Department of Revenue. So this doesn't consider what that impact would be, but once you owe more than $1,000 to the Indiana Department of Revenue, to the state of Indiana, you can be hit with underpayment penalties. So that's just another thing to consider as we move forward. And I think that's it for me, Hale.
Yes, perfect. Thank you for walking us through that extremely important information, Andy. So next, we'll hear a short personal story about loan forgiveness from the moderator of today's Q&A. So please remember to send your questions in the chat for our Q&A that will begin shortly. But let's hear that personal story before we begin and give everybody some time. Today's special guest moderator is Andrew Van Singel, the IRS Wage Investment Division's Stakeholder, Partnerships, Education, and Communication Chicago Territory Manager. Before joining the IRS, Andrew worked for the American Bar Association, Taxpayer Advocate Service, and many other organizations. So Andrew, welcome. We're all ears for you, but while you share your story, I'm going to leave some of these resources on screen. Please feel free to hop on now.
Very good. Thank you so much. Hello and good morning, everyone. I just wanted to give a brief kind of historical perspective of the Public Service Loan Forgiveness Program and kind of my journey through this program, because one, we can, at least I can celebrate, and hopefully y'all are happy for me as well. But as of February of this year, I had my student loans forgiven through the Public Service Loan Forgiveness Program. A program which, you know, if you kind of read the headlines, a lot of people really struggled with being able to get the discharge and the confusion. And it was a long process. So let me take you back to 2010 when I first started law school. I was a non-traditional student. So I graduated undergrad after a couple years of, you know, I had a medical issue when I was in college. So I had to drop out of Michigan State, went to community college for a couple of years, and then re-enrolled at Western Michigan, worked 2, 3, at some point 4 jobs at once, and was able to graduate with about $15,000 of student loan debt from undergrad. So it all changed when I went to law school. And so law school, I borrowed I think probably right around $200,000 to go to school. And when I consolidated in 2010, my balance was $220,000. Out of law school, I got a job at legal aid at Prairie State Legal Services. My starting salary as a licensed attorney was $40,000 a year. This wasn't 1970. This was in 2011. So this was only 11 years ago. Starting salary living just outside of Chicago was $40,000 a year. So it was a struggle, and thankfully, in addition to the PSLF program, there's what they call the income-based repayment, or IBR, in which my payments were very low because I didn't make a lot of money. But during that time, there was a lot of anxiety and kind of confusion because in the this PSLF provision was enacted, I think, back in 2008 in the Bush administration, but there was nobody who was eligible for it yet because it took 10 years for it to occur. So it wasn't, I don't think, until 2018 or 2019 until people were going to be eligible. So there was this kind of black hole of what's going to happen in 5, 6, 7 years as they get closer to getting this discharged. In the early years, it was pretty rudimentary on how they tracked it because I had reached out because you had to re-enroll and recertify every year. And I had 1 year in which they put me in an administrative forbearance. They didn't give me any reason. And I was trying to challenge it and say, like, I made the payment. And they sent me literally, like, they had like an Excel spreadsheet. And it was, I was kind of shocked that it seemed like all of this like data is just like on a Microsoft Excel spreadsheet somewhere. But lo and behold, in 2020, when they paused the payments, I didn't know it at the time, but that was in March of 2020, the last payment that I would ever make because, that forbearance was in place all the way until I got my discharge. And it was kind of a really mixed emotion because I thought this was going to be this huge, load off my back, which it certainly was. But because I had not been making the payments for those last 2 years, I just kind of in the middle of COVID, kind of just figured like, okay, this is probably just going to get forgiven. And, but long story short, when I did get my debt forgiven, the balance was over $335,000. And I think a lot of times people, when, people who are maybe critical of this program, I was making payments for 10 years. And so even though I was making payments, and those payments at the end were $997 a month. And so I was making payments for 10 years. And again, I consolidated at 220 and my forgiven balance was $330,000. So it went up $110,000 despite the fact that I was making payments for 10 years because the way the interest accrued, it was what they call a negative amortization. And some of the comments earlier about, the anxiety and how that's impacted the trajectory of my life. I tell a lot of people, I don't feel like I really started like living my life until about 3 or 4 years ago. It wasn't until I started working for IRS that, I was not, I was no longer making that legal aid salary. The loan forgiveness was on the horizon. So I kind of felt like this is, finally in a position where I'm financially secure. I never bought a house. I didn't, like family planning, didn't have children. I felt like all of these things I couldn't do until this student loan debt was behind me. And so there's certainly the financial, consequence of their financial burden of being in debt, but it really does impact other parts of people's life. So that's kind of just my story of it. I would say for anyone who has this, these loans you have to be your best advocate. You have to be diligent, keep documentation. You may need to down the road prove that payments were made or conversations were had. You just really need to stay diligent. I remember about 4 or 5 years ago, I think under the Obama administration, they changed the repayment, the income-based repayment. There was something called PAYE, pay as you earn. And I think it changed the percentage of what you paid from like 15% to 10%. But I was so paranoid that if I went into that program, it was going to disqualify me from like the 6 years. And so I ended up making payments that were, 10% versus 15% doesn't sound like a lot, but that's really essentially comes down to like on a $990 payment, that comes out to like 300 and some dollars a month because it's a third of that payment. So I kind of had to make a strategic decision. I could have been wrong and I could have got into that PAYE program and been fine, but I think that was the challenges that people had over the last 10 years. And I think with this new legislation, I think there's more attention and investment putting into like actually working these cases and getting them resolved and getting people the answers that they really need. So that was my personal story. Just as a quick disclaimer, my personal views or opinions are not of the IRS or the federal government. That's just kind of my personal story here. But I do want to segue into the Q&A session to see if anybody in our chat has any questions here. And Hale, I'm trying to get the I'm multitasking on my Google Doc and also on my Zoom on my phone here. So I'm kind of pulling that up right now while we're
Absolutely.
talking.
Yes. Thank you. Thank you for sharing your experience, Andrew. So you're right. Let's transition to our discussion panel. Everyone, I'm going to stop sharing screen now and ask you to direct your attention to moderator Andrew Van Singel, speaker Ann Petros, and speaker Andy Nielsen. Please remember to use the chat for asking questions instead of unmuting. So I'm going to stop sharing screen. And then Andrew, as soon as you are ready, please feel free to start with the questions we have.
Sure. So first one I have is, what if somebody's having issues with their student loan servicer or the servicer is not applying loan forgiveness, how can someone forge a complaint for that?
I'll take that question since I talked a little bit about it earlier. So first and foremost, you should probably reach out to your student loan servicer if you have a complaint that is likely to be the easiest way to resolve your issue. So start by contacting your loan servicer or your private lender. Reach out to the highest office of customer service or the ombudsman or claims department. You're likely to get an answer quicker that way than just, making a call to the call center. They're not really going to be able to direct your call quickly and resolve your issue in a timely fashion. But if your servicer is unable to resolve your issue and you have federal loans, you should go through the federal student aid feedback system. It's on studentaid.gov to submit a complaint. And when you submit a complaint through that feedback system, you can expect a response via email or letter within 15 days. And typically get a resolution within 60 days. That's according to the education department. If not, as a final resort, you can contact the Federal Student Aid Ombudsman Group, and they can also help with your complaint. For private student loan borrowers, again, head to the CFPB, the Consumer Financial Protection Bureau. They have a complaint database. You can submit your complaint through there. Any personal information will be redacted, but all of these complaints are available publicly, just FYI. And remember, that Navient lawsuit. Even for your federal student loans, you can submit complaints there. The CFPB is monitoring all of this, so it might be helpful if you feel like there are some egregious abuses or issues. But if your forgiveness is not being applied, start by just going to your servicer, talking to them. If not, pursue some of these other options.
So, Ann, thanks for that response. And I do recall myself going to the student loan ombudsman. And I can tell you when I went there, one of the things that they required, I don't know if it's the same now, but they want you to try to attempt it first with the servicer before you can get eligibility. So If that's the case, just again, make sure you keep good records and documentation. And then so when you go to the student loan ombudsman, you have those, you can demonstrate that you've already tried to resolve that through the normal challenges. Andy, did you have anything to add on to that? Otherwise, I have a couple more questions here.
That's great.
Okay, so what if the taxes incurred because of the forgiveness are too high for someone to pay when they do their taxes?
Yeah, I can take that one. So the department, as I mentioned before, if you happen to owe over $1,000. So if you're looking at what you're looking in forgiveness, and given that there's not, that right now, that those student loans forgiven would be taxable, I recommend you try to estimate what your tax payment should be and maybe make a small payment. I don't know your situation, consult with a tax advisor, but see if you maybe need to make a small payment to avoid that underpayment penalty. But if you come tax time and you do have a large balance due, the Department of Revenue does provide for payment plans. So you can work with the Department of Revenue to pay your taxes over a period of time that would work into your budget.
Yeah, and from an IRS standpoint, again, it seems like mostly a purely state tax issue, but the advice we give to people is to file on time and pay as much as you can by the deadline. Some people, if they owe, they say, well, I'll just file this when I can pay it. But the penalty structure for federal tax is that if you file a day late, it tacks on a whole separate penalty stream. And so even if you don't end up paying this for 6 months or a year, you're going to pay more in the long run if you file, if the deadline's April 15th, if you file even April 17th, that same penalty is going to accrue. And again, there's resources available. There's low-income taxpayer clinics that are available to help people that end up owing or not able to pay what they owe. So next question I have, and I'm actually really interested in this question as well, because this was asked to me yesterday by a family friend who has 2 children who are going to qualify for this. And luckily for them, their loan balances are quite small. So this relief is actually going to pay off the balance of their student loan debt. But she had a Parent Plus loan. So she wanted to know, is the Parent Plus loan going to be eligible to the parent, or the forgiveness going to be eligible to the parent? Anyone want to take that one?
So I did look into this, and the Parent Plus program loans are eligible for forgiveness, and it is separate and apart from the loans that your children have. So you individually are eligible for forgiveness and debt cancellation of those loans, so long as you meet the income limits.
Okay, thank you for that. So another question, this is for the state tax computation. For the underpayment penalty, if you owe more than $1,000 but pay it immediately with your return, are you going to get hit with a penalty there as well? Andy, do you know that one? I apologize. I think you may have already addressed this one.
Yeah, so it's I will say it's possible. So they're going the state they put it in a calculator and they say, okay, say you owed $1,000. They would say you should have been making, let's say, $250 in payments every quarter. And so the amount that is over that 1,000 could be subject to a 10%. So it could be subject to a 10% tax. So it's possible. And that's why, we're hoping for, looking into next year, that even if taxation stays on the books for Indiana's code, that they help clarify some of, that's a great question. Like, how will they assess the underpayment penalty? Are they going to assume that the cancellation was spread out over the entire year, or is it just a Q4 payment that you should have made? So don't have a great answer there, but something that we will be continuing to watch.
Yeah, I think when we have these new policies, the outcome is pretty simple, but the mechanics of how you get there, sometimes it's not always even like contemplated. And so I think a lot of these issues are going to get resolved as these issues come up. So I think when you have if you have something like that where you're getting a penalty, speak up and raise those issues, because I think that's important for the people that are writing these rules and regulations to understand the impacts of all of this. So here's another tax question regarding insolvency. So at the federal level, if you have a cancellation of debt, there's what they call an insolvency exclusion, in which if you have more liabilities than assets, meaning you owe more than what you have in cash, the value of a car or a home, you can exclude that amount from federal income taxes. Is there a similar provision in Indiana that would not, that people could maybe get some forgiveness in this regards through an insolvency exclusion?
I actually don't know that. I know, so I mean, one of the issues is that when a borrower applies for, it maybe goes going through the bankruptcy process, that student loans, it's very, very, very difficult to have your federal student loans discharged in bankruptcy. So prior to coming to the Institute, I was working with low-income individuals and families, and when they would go through the bankruptcy process, they would be surprised that after all of that, the $20,000 in student loans would stick on their credit reports. So I actually don't know how that would be treated, because I don't know when that would actually be happening. You know what I mean? That's a good question, something I'll have to follow up on.
Yeah, I mean, in Illinois, your federal adjusted income kind of flows through to your state return. And so it's kind of interesting because it's not going to, I don't even think it's going to show up on a federal return, meaning like you claim it and exclude it, and then it would be excluded at the state level, because in this situation, the federal government is explicitly excluding this, or, it's forgiven, but not at the state of Illinois. So I'm not 100% sure on that one as well. And I'm a tax attorney, so that just goes to show you, like, it's very complicated, and every state's probably going to have a different kind of nuanced structure with this. Other question we had here is there legislation that's being, kind of in that, vein? Is there legislation being introduced in the IGA in the upcoming session for Indiana to not tax the loan forgiveness and maybe simplify this?
So someone on this call maybe to answer better, but I know that there have been a few members who have said that they will be filing legislation to exempt these from taxation, exempt loans from taxation. And we have heard also that if that were to happen, so it's a pretty easy fix, that borrowers who, if you remember what I said at the beginning, this has been, India's been taxing since 2021. So we have some borrowers who receive forgiveness under PSLF and have paid income taxes, that the Department of Revenue says it's a pretty easy fix. So if, for example, retroactively strike that, borrowers would be able to receive those taxes that they paid on the discharge debt. So it is something that I know a few members have indicated they're going to pursue this next legislative session. And legislative leaders have said it's something that they know they need to address. So more to come there, but this is receiving a lot of interest, and so we hope it moves in the right direction.
Okay, thank you for that. Another question we had was, do parochial school teachers and administrators also qualify for loan forgiveness? I'm not sure if there was a follow-up to that one.
I think the answer is yes on that. If you meet the income requirements, that's about it. Doesn't matter where you're working.
And that goes to the status. Maybe I think the root of that question is, is a parochial school a qualifying organization? And am I getting that right in terms of the forgiveness?
I guess I'm not sure if the question is asking about the PSLF or just the Biden administration loan forgiveness.
Yeah, if whoever asked that question can clarify if they're talking about the $10,000 or $20,000 forgiveness versus the PSLF. I think if it's rooted in PSLF, that the question really goes to whether where you're working is a qualifying organization, and if that's the case, that would be that should be a qualifying organization, correct?
I believe so, and you can always double check. There's a database of employers that you can ensure that your organization is a qualifying employer, so that you can get that relief through the PSLF. But it's worth going in and checking your employer status.
Yeah, and that's another good point here, is that if you're doing your research and attending webinars like this, your situation is going to be very fact dependent, and so this can give you some kind of parameters as to what is going on. But again, going to being your best advocate, you got to dig in. And so in that situation, you'd want to look to see if they're a qualifying organization, if we're talking PSLF. But if it's just for the 10 or 20,000, I don't think where they work has anything really to do with that forgiveness. Is that correct, Dan? As long as they meet the income, guidelines and the other eligibility criteria. We've got a question here about ITT Tech, and I know I follow the Department of Education on Twitter, so I recall seeing a lot of tweets that they had put out about forgiveness for those borrowers. So there's a question about what about those ITT Tech borrowers who had made a lot of payments? Can they recoup any of those payments that they made before the debt got canceled, or does the remaining balance just become forgiven? If anyone's familiar with that situation. Anne, are you familiar with that ITT Tech settlement?
I know a little bit about that settlement, and my understanding was that it just discharged all remaining debts, not that you would get a refund for previous payments. So any loans that you received between, what was it, 2005 and when ITT closed in September of 2016, those loans would be forgiven, but I think you might be out of luck in terms of getting a refund for payments that you had made on those loans.
Okay. Next question we have is, one of the constituents has a student loan and a Pell Grant. A company recently purchased her student loan. They lumped together the principal plus the interest and now considers that the total loan amount as her new principal. Who should she contact to find out if this is an unfair practice? I'm not 100% sure. It sounds like that the loan was purchased and they re-amortized it. So there was a portion of it that was principal, portion of it that was accrued interest. And then when the loan got repurchased, it just lumped it all in as principal.
Yeah, I don't think that capitalizing the interest on the loan and making it part of the principal balance is an unfair or abusive practice. But if there are concerns, I think the CFPB is probably your best bet, and instruct their constituent to file a complaint through the CFPB, and they will investigate that and respond, or the institution will respond with their authority to be able to do that.
Very good. So we're getting to the top of the hour here. I promised to turn this over at 10:55 or 11:55 for the people in Indiana. But I got one real quick question. I don't think nobody has a crystal ball, but I wanted to address this question, which is the program based on loans at a snapshot in time, or does the federal government expect to continue to help those on an ongoing basis? So, Anne, I think you gave the date. I think it was in June, correct? That's the kind of the cutoff under this program.
That's right. So June was the cutoff for the program, and the application is going to be available through December 31st of 2023. So you have until that time to file your application for forgiveness for any loans that were made prior to that June date.
Very good. And I know personally, my significant other went on to that beta platform to apply for the forgiveness for her student loans. And so as of yesterday, she did it. She said it took literally 2 minutes. She had to put in her social security number, address, date of birth, and just make, there's a little checklist of the eligibility rules, and said, do all these apply? She said, yes, hit submit. And that was it. Just took her a few minutes. She did try earlier in that day and it was down. And that's something that I think they had explicitly said may happen, that this program could go in and out of availability, probably because of bandwidth if everybody's trying to apply and do it all at the same time. So I just wanted to make that plug. I'll turn it back and to get this thing closed out. So thanks everyone. Good discussion here. And I think our contact information we put in the chat. Feel free to reach out.
Yes, thank you so much. That's really great, guys. Let me share just a few more closing thoughts and important info before everybody hops off. So I just wanted to thank everyone who attended. If you enjoyed your time with the ANO Network, I want you to know that we have another learning session coming up really soon. It's on November 9th. So this learning session is called It's Time to Talk About Financial Trauma, which is an issue that many Hoosiers deal with. I'm really excited to say that our guest speakers for this call are the experts at the Financial Health Institute, and we'll even be joined by their founder for this special event. Their founder is actually coming to present, which is very cool. We'll talk about financial health, financial stress, economic trauma, and how to make your organization more financially trauma informed and friendly. So you can register for this free event by scanning the QR code here. I'll also send you guys the link later. But I would love to see you guys again if you found this useful. Yeah. Just other than that, thank you for being a part of the ANO Network. Be sure to sign up for our emails if you haven't already, especially since our quarterly newsletter is coming out next month. Maybe we'll have more information about this issue. And feel free to follow us on Twitter. Thank you everyone for joining us. Thank you to our awesome speakers, and have a great day, guys.